Afternoon, everyone. I, CHR Misha, on behalf of Professional Skill Enrichment Committee, ICAI, welcome you all participants to today's webcast, The Art of Regulatory Skills, Essential Tools for Today's Chartered Accountant. I welcome today's resource person, CA Dinesh Chavla sir, and all the participants present over here. To introduce CA Dinesh Chavla sir, he is a chartered accountant, company secretary, and independent director, and established an inspiring career in valuation, transaction advisory, startup consultancy, and strategic financial planning. With over a decade of diverse experience, he has led high impact projects across multiple sectors, guided businesses through complex transactions, and contributed meaningfully to strengthening India's valuation frame. Currently, he is a CEO of Account Finance Consultancy and having previously held leadership roles in private banking and corporate advisory. He is also known for his analytical depth, clarity of thought, and commitment to profession. With these brief introduction, I welcome Dinesh Chavla, and now floor is all open for your deliberation. Over to you, sir.
Thank you, CHR Nisha. Thank you for the wonderful introduction. And yeah, I'll just put up my screen so that it is visible to the participants. Just a moment. Yeah, is my screen visible? Fantastic. Yeah. So, very warm welcome to everyone who's taken their time from their busy schedule to join this webinar today on the art of regulatory skills, conducted and hosted by the Professional Skill Enrichment Committee. And I thank the members and the conveners of the committee to give me this pleasure to share my thoughts on what is the art of regulatory skills and how a chartered accountant can access various tools and toolkits in today's world to be updated about what are the regulations which are applicable to a particular business, to a particular individual, to the society as a whole, and be the beacon of light and the advisor who can take forward the journey of the various businesses. So with this brief background, let me start my presentation in establishing the fact on what will be our today's coverage. So our today's coverage would be on the following. One is the new age landscape. In today's world, where we see that many new regulations, many new laws are being established, old laws are being repealed. So when we are having so much buzz about the regulatory changes, how can we as chartered accountants and professionals uh, understand this evolving environment on the regulatory side of things, and how we can update ourselves and help our clientele to plan better in terms of making them compliant, right? So that will be the first area of our coverage. The second area would be what are the core skills which a professional chartered accountant will require in being useful for their clients, and in helping all their clientele to ensure that the compliances part of things gets taken care, which is very, very crucial for any of the businesses, any of the business owners and things like that. So these are all very, very crucial aspects in terms of what are the core skills which a chartered accountant should develop. Alongside with that, what is the kind of regulatory ecosystem which the chartered accountant should be aware, so that their clients in which environment they're operating, they can help their clients in making their journey smoother, and how to be on the right side of the law, and how to take care of compliances along with the framework which are being established by the government, right? So that will be on the regulatory ecosystem. On the practical tools side of things, there are certain techniques and technologies, and there are some methodologies using which how a chartered accountant can keep themselves updated, abreast about each and every update. There is Google alerts which are available. There are notifications which various government agencies publish, and how to keep track of these notifications. All those things will be very impactful for a chartered accountant to keep themselves updated. Followed by how a chartered accountant can be providing tailor-made solutions, can be provide their tailor-made expertise uh, into the defined areas of roles. So today, if you see a chartered accountant and a doctor, gone are those days where we used to be generalist. Now we have to welcome the days of being a specialist. You can be a generalist. Once you've cleared CA exams, you can be a generalist. But again, when you start your career, you need to become a specialist. You need to have a separate identity. For example, to connect with the doctor's side of things, today you have a general physician MBBS, followed by a skin doctor. Within skin doctor, how different body parts of skins are affecting. Within the eye doctor, how different types of eye doctors are there. Eye doctors are there for seniors, for cataract, for normal human beings, for kids, for unborn children. So to that kind of an advancement is already there in the field of medicine. Similar advancement is expected to arrive in the field in our profession as well, wherein we will be specialist for each and every area of each and every limb of our ecosystem. So, what kind of a specialist which we will try to become will be crucial to look at it. Followed by, when I'm saying that we'll become specialist, how much ready we as chartered accountants are in terms of being the right person for the advisory side of things, and how we can prepare ourselves, our clientele, for the emerging regulatory challenges which will be anticipated because of certain laws and certain provisions. So our journey, this will be our journey today, one on the new age landscape, on would be how much focus we would give on what kind of uh, excuse me, on the new age landscape, on what kind of new regulatory environment will be applicable, on what kind of core skills which are required by a chartered accountant within the regulatory ecosystem, using various practical tools and becoming role specific specialist, followed by future readiness. So here we go on the today's journey. The first aspect which I would like to discuss and deep dive on this is what all the new age regulations require. Now, today, regulations, gone are the days where regulations were complex, written in a difficult language. We are welcoming those days where regulations are written in a plain, simple English language. Under that, what kind of complications can arise is where the practice of a chartered accountants will definitely lie. Uh, in terms of the regulatory skills which we should have, of course, our syllabus has taken care of us from CA Foundation to CA Inter to CA Final, wherein the journey of becoming a chartered accountant equips us with the relevant toolkits, with the relevant knowledge, with the relevant interpretation which we should have with us, so that our skills can be honed in such a way. And of course, to top it off with the articleship experience that subsumes everything into one bigger pie, where we were earlier acting as a support function in this regulatory landscape. Now we are the core drivers on these new regulations. To give you a small analogy, let's take the classic example of Income Tax Act. Right? Under the income tax law, we as chartered accountants are eligible to represent up to income tax appellate tribunal. Beyond that, only lawyers can do. But if you see the depth of knowledge which the chartered accountant possess vis-a-vis the depth of knowledge which a lawyer would possess in terms of understanding the nitty-gritties of the transaction of your client, that will be phenomenally different, because the lawyers are involved only when there is a dispute, whereas a chartered accountant is involved from the initiation of the transaction itself. So even before a transaction happens, chartered accountants' views are taken. Clientele definitely involve us in terms of planning the transaction better. Once we are involved at the planning stage, we will know the historic background of any particular issue which a client may end up facing. We summarize the entirety of the situation and we submit it to the lawyers so that they can further submit their arguments in the court of law to fight on our behalf. Until the income tax appellate tribunal level in the income tax law, we handhold the client. Only when the dispute reaches the next stage, wherein the department is very, very strict and not letting things go, there we engage lawyers and get things done. That's how the role of a chartered accountant has transformed from a mere executor of all the compliances, because CAs were looked upon as people who were just doing compliances. Now we are becoming their governance partner because the world is having this acceptance that even the knowledge of a CA, where they should be in terms of from the planning stage itself, we should involve the expertise so that we don't end up on the wrong side of the law later. Having said that particular aspect, that upgrading ourselves from the executor to the governance partner, what happens further? We are increasingly held accountable. It is really good that chartered accountants are held accountable for the actions and the decisions which they are taking, which they are willing to take. But that increased accountability comes with the next challenge in terms of what kind of scrutiny multiple regulatory frameworks will require. To know that the chartered accountants have the depth of knowledge to study the various different forms of frameworks which are available. If you as a generalist can achieve everything, fantastic. No, you can become a specialist in a particular law. Like for example, take valuation, take income tax practice, take GST practice, take FEMA practice. If I were to take a FEMA practice as an example, under the FEMA practice itself, various limbs are involved, right? One limb will cater to capital account transaction, another limb will cater to current account transaction. When I say a capital account transaction, it can be in terms of debt, it can be in terms of equity. If it is in terms of debt, then the framework of BCB regulations kick in. If it is in terms of equity, then the framework of the funds being raised for indirect investments, overseas investments gets kicked. There are different forms of frameworks which have been established. But we as accountants, excuse me, we as chartered accountants are known to have a knowledge of all these aspects. This is how, under FIMA, under the capital account transaction, chartered accountants having first-hand knowledge of how a particular compliance would work, how a transaction would work, that gives an added boost to the corporates, to helping them in being their governance partners, right? Followed by, let's take an example of the current account transaction. Whenever an import or an export is happening, today the RBI has changed the portal multiple times. Every day, some new element is getting added. If not every day, at least once a week, some new element is getting added, to which RBI is coming out with an FAQ. We as chartered accountants are 100% better equipped with the skill set to be aware on what kind of changes will impact which particular aspect of the reporting metrics, right? Followed by global influences. Gone are those days where we're restricting only ourselves to Indian territory. We have evolved so much that many practicing chartered accountants have migrated to Singapore, have migrated to Dubai, have migrated to Australia, have also migrated to the US and London, UK. Pure reason being, our alma mater, Institute of Chartered Accountants of India, is coming out with a lot of memorandum of understanding with the relevant professional bodies of those particular countries, wherein we can set up shop there. We can, excuse me, we can operate under the local law. We can partner with the local person and operate it on the certification or on the governance issues, because any business you take in India, they'll not stop at India. After a point in time, they'll definitely go global. When they are going global, if we are aware as chartered accountants, what are the latest regulations applicable for going global, including India and including the local country, that would give an added advantage to all of us in terms of advising our clients. So, global influences, global standards are now being accepted, appreciated, known for by Indian CAs as well. One classic example which I would like to narrate here is the Ind AS convergence. The foundation of India's convergence starts from international financial reporting standards, except for India's AS 303132, right? That itself is a different subject altogether, financial instruments. If I were to take one common example on how global influences are happening, we have IFRS converged in AS, wherein we as India, when we are trying to go global, when that is happening, when that is the new global investors, global stakeholders want to read our financials. We ourselves are upgrading our reporting mechanisms so that such financials become readable in easy format. Now, one would argue that okay, XBRL was anyway there. Why the shift in the accounting practices? Because the world is becoming one smaller village. Having said that, when the world is becoming one smaller village, when international standards are reshaping the domestic compliance environment, there is definitely a need to have first-hand knowledge on what and how the implementation would happen, what and how the compliance should happen. So this is on the global influences side. Rising expectation. As I was mentioning earlier, stakeholders are now demanding ethical and regulatory excellence in all the digital ecosystems. Now, one may argue that there are a lot of listed companies who have gone global. Are everybody ethical? Are everybody, let me put it this way, are they ethical, or are their stakeholders demands ethics to be followed? The answer is no. But again, there is something called as the conscious of mind. So when consciousness hits you, hits your business, you start to see the results in numbers. So you should be strong enough in saying that, look, I will always abide by ethics, abide by the regulations which have been published locally, so that there is always the peace of mind and the goodwill which the brand would definitely go ahead and build. So this is some new age regulatory landscape where CAs are expected to be aware of what kind of regulations are applicable even on the global scale for your clientele, and just for the awareness sake, so that you can win more businesses. As I was narrating earlier on the domestic regulatory framework, the Chartered Accountants Act 1949 and its connected regulations stand the foundation of our professional standards and our code of conduct. I am sure everybody would have definitely read about professional ethics in their CA final audit paper. I am sure that everybody would have given importance because those were easy scoring marks at that point of time and even today. Having said that, all of us should appreciate the fact that we should abide by our professional standards, our professional conduct, our ethical conduct in terms of how we behave with the client, how we carry ourselves, how we can put across and how we can commit to all the stakeholders who are having faith on us. These are the ultimate guide. The CA Act and the regulations connected to it is the ultimate guide on how a chartered accountant should and should not behave in the society with the client, with the stakeholders, and things like that. So, having said that, I would definitely take credit in terms of sharing this knowledge. I There is Chat GPT, connected CA GPT, to summarize all the regulations under the Chartered Accountants Act. The chartered accountants can have a daily dose of learning through the CA Act and CA regulations using the CA GPT, wherein you can give it a prompt saying that every day give me a prompt in making me aware about the CA Act and CA regulations, which people may not be aware of today's generation. Moving forward with the Companies Act 2013, under the Companies Act, which got upgraded about 12 years ago, there are lot of compliances which a chartered accountant can assist the can assist the regulators as well as the corporates, because the depth of the application of the regulation is so wide that, be it a small company, be it a private company, be it an unlisted company, be it a listed company, everybody has to comply under the Companies Act 2013 if you are a corporate. Now, when I'm saying Companies Act, even one-person companies are covered under the Companies Act. The compliance requirements are so enormous, so vast that even a small error can cost you a few 100,000 rupees. Let's say, for example, when you're incorporating a company, you need to file the commencement of business form, INC 20. Excuse me. When you're filing the commencement of business form, if a small business is not aware that there is such requirement, it'll cost them huge in terms of penalty, and it'll cost them huge in terms of the negative sentiment which will come across through non-compliances when they are trying to raise some funds. So it is always safer and it is always cheaper to comply with the law, to, to have the costs of compliance, rather than waiting for any situations to get out of hand, because the cost of non-compliance is definitely going to be very, very high under the Companies Act. Let me take one more example there in the Companies Act, wherein all the directors in the company are mandated to do DIR3 KYC every year. Earlier, it used to be the entire data. Now you just have to log into the ROC portal and then click a few buttons and then confirm the data unless there is a change in the data. A lot of small businesses miss out on this. And if there is a continuous non-compliance of 3 financial years, then the DIN will get deactivated. So these kind of consequences, chartered accountants are made aware. Chartered accountants know how it works, and they can abreast the client with this definite knowledge. Let's move on to the Income Tax Act. Under the Income Tax Act, which was drafted in 1961 and in effect from 1962, the Parliament has passed the changes that Income Tax Act 2025 will become applicable for the next financial year. Having said that, I would definitely call that it's a good upgrade, it's a good revamp, and in the good direction as well, where the law is trying to address a lot of hidden issues, but it is also taking cognizance of the fact that the foundation is not disturbed. By a foundation is not disturbed, I mean that the heads of income are not changing. Salary is staying, salary, house property is staying, house property, PGBP is staying, CPGBP, capital gains, and other sources. How to arrive these numbers may undergo a slight change in the new law, and as it evolves, time will tell that it has come for the good. Having said that, I'm sure most of us are aware about what are the changes which the Income Tax Act 2025 is bringing to its shape, apart from the change in the section number. We need to be prepared firsthand in terms of what would be a different and additional compliances in addition to what is existing. By this, I mean that if a compliance is already in existence, we are aware on how things will work. If a new compliance is introduced in the existing forms or by way of newer forms, it's better to keep ourselves updated and be ahead of the curve so that we can deliver finesse when we are speaking to the client and we are doing the compliances. So that is about Income Tax Act 2025. Let's move on to the GST, the goods and service tax, also claimed by the government that good and simple tax, right? I'm sure everybody is aware about what GST is and how many laws it got subsumed, and all the states now follow GST, IGST, CGST, and SGST. Having said that, GST was introduced in India with a little bit of under preparation in terms of the framework of the law and the system's capability. But again, over time, it got evolved, and today we stand where we are. If you see, it impacts so many businesses, so many lives, not only corporates. It impacts individuals. It impacts HUF. It impacts AOPs, BOIs. You name it, and it's there. When a money is moving from one place to another place, if it's moving beyond a certain threshold, unless it is a gift, GST is applicable. That's the power of indirect taxes, wherein if there is a small non-compliance which is going to get triggered, the impact will be multifold. The entire chain will get impacted in the scheme of compliances, right? Of course, the law is now becoming more and more vibrant in terms of how and what pace the things should go. But still, it's a long journey ahead as well in terms of the compliances. Now, most of our clients are aware about what are the compliances, and government is also working closely in simplifying these compliances. So the next age and the next set of business potential which chartered accountants can venture into is as follows, which is you can be involved, as I was saying, you can be involved from the planning stage of a transaction itself. Of course, certain indirect taxes also impact the capital account transactions. But for that, in terms of current account transaction, with the changes with the GST 2.0 coming into place, a small change in the HSN code may have a ripple effect on how we are charging our customers, how we are inputting our services, whether we are eligible to claim such inputs, whether we are ineligible to claim such inputs. An advisory mechanism on those aspects can be brought under the GST framework, under the indirect tax framework, in terms of our advisory to our client. Moving further, FEMA 1999. So India had opened up its doors to the global world to put in money here and then explore and exploit the local resources. There was a necessity of a regulator to be in place. Reserve Bank of India acts as the gatekeepers of the flow of currency within India and incoming to India and outside India, going out India. And RBI enables and orchestrates a lot of cross-border transactions as well. Basically, when FEMA was brought in place, there were a lot of regulations which were published in plain simple language with the simple proviso. If anybody picks up any of the FEMA law, be it non-debt instruments, be it FDI rules, be it overseas investment rules, language is pretty simple. Language is pretty straightforward, unlike any other law which we don't practice. If you see the application of that particular aspect, the RBI is very, very clear. For a particular transaction, let's say take an example of a capital account transaction. The RBI is very, very clear that if I'm permitting something, it is permitted. If I'm prohibiting something, it is prohibited. If I'm not written something, it may be permitted, it may be prohibited, it may be through an approval route. But if I'm prohibiting something, it is always prohibited. So we cannot have a workaround using that prohibitive nature of language in any particular transaction which we're dealing with. So that kind of simplicity is there in terms of the FEMA law. Moving on, the other aspects where CAs are now becoming the torchbearers and practices money laundering cases, Benami Act cases, wherein when we are aware about how the income tax triggers, how the Companies Act triggers, how the GST triggers, and how foreign exchange laws triggers, with the ethics and the principles laid by our CA Act and CA regulations, we are assisting our clients in terms of fighting, supporting on their behalf under the money laundering cases, under the Benami Act cases, wherein when we are aware about how these laws function, we are helping the client in becoming more compliant because certain cases government has harassed certain SECs using the law, but again we are acting as their defenders and then help them get out of those situations. So having an awareness on what the Money Laundering Act and what the Benami Act says is of crucial importance because it is not restricted only to one particular law. It is restricted. It has an unrestricted access basically across various laws. Across various laws. Let me move forward. How the global regulations is influencing the Indian landscape. As I was discussing at the beginning of the session, how IFRS have shaped the accounting of larger companies. And now we have Indian accounting standards, also known as Ind AS, which takes its foundation from International Financial Reporting Standards, which is a global norm of harmonized global accounting. Of course, every country has their own version of financial reporting standards, but most of the countries which have gone global follow the international financial reporting standards, or at least publish the information in IFRS so that the global audience is catered, so that the users of financial statements are aware that this is the bare minimum benchmark which I would receive. If you take an example of Infosys was publishing their financials in IFRS way long ago, way long ahead of its time, even when India's came into picture. So they were ahead of the curve because they are a global IT company. Having said that, financial reporting happens only once a year. It is the global benchmark where an investor or a users of financial statements gets access to what is and what would be for the particular company. Having said this, IFRS laid the foundation for the Ind AS to come into picture. And now when their Ind AS is in place, we have added our Indian flavor to it, wherein we have converged certain practices to align with our local policies. For example, small example, under IFRS, there is a strict norm saying that the stock statement which is not submitted to the bank will be treated as a violation of the condition. We in the Ind AS converged IFRS, we have given a small exemption over there so that we know that there is a delay in submitting the stock statement, but it will not hamper the way in which we present our financial statements. It will not impact the going concern of the business because it's just a stock statement unless it is materially misstated. So that kind of convergence globally every nation has adopted. We as India has also adopted. Slowly and steadily with IFRS, with ESG, we are moving towards better environmental, social governance frameworks, which is the ESG framework. Now, everybody is aware that ESG is of prime importance. We are starting very, very late in uh, terms of catching up with the speed in which the earth is polluting itself. We are polluting the earth on itself. But at least somewhere we need to start. ESG is at the right space right now to start in because if we don't protect our environment now, 2 generations to 3 generations from now, there'll not be clean air, clean water for the people to live in. Hence, taking care of environment, taking care of the society, taking care of the governance framework is the only way where sustainability can be driven from there. Next comes the OECD and the BEPS. Base erosion and profit shifting initiative is reshaping various tax landscape. If we as chartered accountants start understanding the criticality of BEPS, it is very, very crucial to know that globally how tax havens are used, and India never allowed to become one of the tax haven for itself. Similarly, all the developing nations, come developed nations, are using this as a tool to avoid becoming a tax haven. We as chartered accountants should be aware that what is a tax haven jurisdiction, how money gets laundered, how globally best practices are being aligned so that these issues can be addressed. On the other side, we have taken these principles also and introduced place of effective management in the income tax law. Place of effective management also helps in aligning and shaping with the base erosion and profit shifting plan. Next, on the DPDP Act, which is Digital Personal Data Protection Regulation. European Union is the one who started this initiative where they wanted the retention of privacy after the 9/11 attacks in the US, which happened about 25 years ago, 24 years ago. Everybody wants safety. Safety comes at a cost. Safety comes at a cost of monitoring. So to achieve safety, we need to monitor each and every resource, each and every citizen, each and every transaction, each and every person. To achieve that, reporting should happen. How are we reporting? From an individual's perspective, we are using our mobile phones. Mobile phones have applications. Applications capture data in the background. That's how it gets reported. And those applications access your personal data. Today, I'm sorry to say, personal data is not personal anymore. It is just some lines of ones and zeros sitting in some servers, accessible by anybody who has the level of resources which they have to access such kind of data. To ensure that privacy is maintained, to ensure the control goes back from the data owners to the data, from the data manipulators to the data owners. These regulations had initiated in the year 2017 in the European Union, got formalized, streamlined, strengthened. COVID came, and then later on it got enhanced, and finally in 2022 or 2023 it got passed. A ripoff of that is what India is trying to achieve. A small example here would be, to get anything, you need an Aadhaar card today, be it a gas connection, be it a phone connection, be it a mobile SIM, be it any transaction beyond 50,000 where PAN and Aadhaar both are mandatory, right? That particular Aadhaar card, when we are using it, we are giving a Xerox copy. Ideally, you should not give a Xerox copy, but because the systems are not in place, we are giving a Xerox copy. But do we take a step ahead? Can we take a step ahead and write for what purpose we are going to use the particular Xerox copy? For example, you're applying for a new mobile connection. You should write before giving your signature, before doing a self-attest. You should write below that this copy of proof is being submitted for that particular purpose of submitting to get a new SIM card. If we mention the purpose, it will take hardly 10 additional seconds to write that particular information. We can safeguard our credentials. Of course, that further can be manipulated, all this can happen. But still, for our consciousness to stay alive, we can definitely ensure that our personal data is protected through our own means and not let go of control from our hands. So these are certain aspects of global regulatory influences which have happened in the Indian landscape. The modern CA skill stack. There are 5 essential competencies which every chartered accountant must master in this year 2025, which is ending in a month or so. Interpretation skills. We are experts equipped with relevant knowledge to do the appropriate interpretation of the law. I'm not using the word right interpretation of the law. I'm using the word appropriate interpretation of the law. We are equipped with such capabilities that we can do an appropriate interpretation of the law because we are known to read statutes, we are known to read the legislative intent, we know how to conduct an amendment analysis because all of our clients, whenever there's an amendment in the law, expects us to brief them. When we are saying that we should be abreast in reading statutes, we should know what a statute means. We should know how notices, how circulars are published, and how to read in between those statutes, in between those circulars and notices with precision so that when we try to interpret the reading of the law, it forms a harmonious output, right? So that is what reading of statutes. Legislative intent is established either by the regulator themselves who publishes the relevant legislative to give us why they are introducing or amending certain particular regulatory provisions, or it can be established by certain judgments of some courts, high courts, or some pronouncements. So the legislative intent acts as the rationale behind the regulatory provisions, and the legislative intent acts as the rationale behind the regulatory provisions. Just a minute. Right? Yeah. Thank you. Thank you. Yeah. Uh, we as chartered accountants should have certain analytical and certain compliances skill. Under the analytical skills, I would definitely add regulatory skills to be of prime importance, wherein we need to know how to read the law, how to interpret particular complex regulations. A classic example would be various contradictory judgments, which are flowing for each and every section of the income tax law, of the GST law, because some particular section, even with the relevant legislative intent which is given, is interpreted in a different way in one particular court vis-a-vis in another court. So we need to take cognizance of the fact that when this kind of thing is happening, how effective the reading and the interpreting skills of a chartered accountant can be honed, because unless we pass through that particular journey, we'll not be able to decode the complex regulations. So that extreme reading is important. Now that we have tools like ChatGPT, Perplexity, Copilot, we can take their assistance and be ahead of the curve in terms of how the interpretation will finally work, whether it will be in favor of our client, whether it will not. That needs to get captured. This needs to get interwoven with the legislative intent of the law before it becomes the application for the client. And the relevant inference should also be communicated in such a way that it helps us to be around the law, right? Alongside this, whenever these interpreting issues happen, it will happen only at a particular point in time. If you are analyzing a historic issue, you should go back to the year in which the historic issue appeared, how the law read at that point in time, how the law reads today, because we cannot predict the future. And when the same issue arises in the future, how would the law read in future according to what changes happened in the past? That will become the foundation of understanding the amendments and their impact. A small analogy here would be, if any search and seizure cases is happening, and then it is going for block assessment. Year on year, under the Income Tax Act, the law has changed, the basic exemption limit has changed. Some would have come, some would have got removed. Keeping track of the legislative intent along with the amendments and then handling that particular assessment would be of greater importance than anything else. Moving forward to the compliance design. We as chartered accountants are known for enlightening the clients in terms of what kind of framework, what kind of design a particular template has, right? We ensure for smaller clients that they are compliant of an end-to-end compliance. As I was saying, there are three KYC example. Similar to that, I have seen INC 20A example. A lot of companies I have come across where all the startups they just incorporate a company and then just they leave it. They forget about it, and then 3 years down the line, when their DIN is about to get deactivated, they come running to us that look, I need to do the compliance. So many cases we have addressed in terms of these non-compliances where what has happened is many founders start a business because it's a startup in nature. The idea may not get off, or the funds may not arrive in time, or there might be some external existential disputes. At the same time, this non-compliances will cost them more than any other thing. So we as chartered accountants have to advise end-to-end compliance framework and help design the clients on what compliance they need to take. Similarly, when we are trying to design the compliance framework, within that itself, we also should know how to address the internal control systems challenges or the internal financial controls over financial reporting, because after a set threshold, this ICOFR or the internal control system is applicable to most of our clients. Having a first-hand knowledge of what the client business does is of crucial importance. Now, I was working with one client in the year 2017-18, where it was a telecom company where they used to send SMSs, OTPs to the clients. If you see, because it is associated with the Telecom Regulatory Authority of India, they cannot just have one license to function, because if one license gets cancelled, the business gets stopped. So the founder had a great foresight, saying that I'll apply various licenses in various companies and I'll keep them all under one roof as a one group holding company structure. When they had done that, if let's say any particular license is getting revoked or getting stopped, similarly new company's license will be used and the business will get. In order to achieve this, the founder had a foresight of having these many layers of companies so that the business keeps running. At the same time, this was getting incorporated. We had stepped in, and companies at 2013 also was kicking off in a very wide mode, wherein we had helped them in designing their internal controls of financial reporting, their entire internal control system, so that we understood each and every process of the client where financial impact was there, either in the qualitative form or in the quantitative form. Now, you may argue with me that how can it be a qualitative impact? Because there are certain cases where the business will face a downturn because of qualitative financial impact. Pure reason being that if that money is particularly not spent for certain aspects, then the continuity of the business may be impacted. Now, having said that, we were sailing with the journey of this particular client, and then we were also conducting and testing their entire internal system. So this was about 3 to 4 months assignment. What we learned from this particular assignment is that, however the group structure may be, wherever the financial systems are there needs to be certain control, because that's what the world demands and that's what the investor demands. And now government is also wanting that particular information in one format or the other. When we are doing this, whatever we do, we should ensure that one copy of documentation is always available with us, either in physical form or in digital form. That is why, under the Companies Act also, having an audit trail established is live and is operating effectively. That is why we as chartered accountants also have to give a certifications justification saying that yes, we have verified the audit trail and it has not been tampered with. So that's how some aspects of compliance design helps us in honing the system and shaping the system. This is one crucial aspect in the new age skills of chartered accountant, where the skill of drafting and professional judgments kicks in. So this is one thing which our alma mater has introduced. It is widely accepted among the company secretaries, among the lawyers, that drafting is a skill, right? How to respond, how to be responsible at drafting. So whenever a particular issue happens, response is the first reaction which we end up giving. How we frame the response comes from the mind. That is for oral discussion. Whenever we have received something in writing, how professionally we should respond to that, it comes with experience and vintage. That comes from the teachings which are provided in articleship, the seniors, the mentors, and things like that. We have the relevant expertise in going through that particular grind during our articleship and knowing how to respond to a particular issue. We know as chartered accountants how under income tax, how under GST, how under FEMA, I need to reply to different, using different anonyms of, using different style of language to the relevant people. Today, we have a lot of tools like GPT, like AI, in terms of fine tuning our responses. So here, what I'm trying to address is we should use those artificial intelligence to fine tune our response and not to create a response from the initiation, because there have been certain cases in the past that the chat GPT had created imaginary cases, and then using that, the department has also passed the order, and then that order was subsequently reversed and revoked. So We should use technology, but in fine tuning our capabilities, in complementing our capabilities, and not to replace our capabilities. And however way we are drafting, be it through written submission, be it through responses, be it through anything. Now, here comes the crux. When we are trying to do this, we should be ethical in our decision making. We should try to balance the client interest, compliance, and the public interest because ultimately we are the gatekeepers of trust whom the public looks up to, whom we ensure that the client does a compliance. It is very, very critical to ensure that we need to avoid the conflicts as long as possible and as much as possible. And we need to maintain professional integrity in our regulatory interactions. Now, to narrate a small example and a small experience of mine is that there was a transaction which I was handling earlier in the past, which involved a lot of FEMA violations, which the regulator had not yet. We as professionals, we could have definitely advised the client to be compliant, but there was a small glitch in the law which we used it and then which we made it work in our favor. So that's how we proved our professional integrity in terms of being compliant with the law. Of course, I didn't mean the plan, but this is how we should act in the interest of the client, the regulators, and the government. Depends on which side of the game you're supporting to. Now, let's move further to understand how the regulatory ecosystem works, because this is very, very crucial, and how one can build a comprehensive awareness about the major regulations that CAs interact on a daily basis. On the corporate and the financial regulatory side, the first line of our defense would be on the Ministry of Corporate Affairs, which through Companies Act has has mandated various corporate governance initiative, functioning of a company, how compliances of company happen, how compliances in and around the companies happen by way of how the director should function, how the independent director should function, so on and so forth, including how amalgamation should happen, how mergers, remergers should happen. So all these things are covered under the umbrella of Ministry of Corporate Affairs, governed through the Companies Act. When I say that Ministry of Corporate Affairs governed through Companies Act 2013 is not the only act which the Ministry of Corporate Affairs has published. There are various other laws which they have published, which a chartered accountant should know on how to take care of those compliances, related compliances. Yeah. So one of the key act is the Companies Act 2013. Next, the connected behemoth in the room would be uh, NAFRA, National Financial Reporting Authority, which every listed company's chartered accountant is now scared of in terms of how the regulator will react, because that particular regulator is very, very strict in terms of smallest non-compliance or smallest inconvenience in terms of the quality standards which are being used. If there is a smallest of the small hindrance, NAFRA will pick it up, and then you will be under the scrutiny. So one should take steps to be aware on what capabilities NAFRA comes with, and how we as chartered accountants can help them tackle such difficulties, because the scrutiny with which NAFRA comes in, it not only comes on the chartered accountant, it also comes on the companies as well. So the penal consequences of such cases are extremely high. Yeah. Moving on to National Company Law Tribunal. NCLT is one where I would say disputes, postmortems, and things like that happens. When there is an acquisition, when there is a demerger, all those things. If you want to make an example out of it, uh, not only disputes, even for certain transaction, you need a regulator's blessing to happen. So those things gets taken care by under the NCLT route, wherein if you're not following the particular law and if there is a dispute between you and the regulator, you can knock the doors of the tribunal and then get it resolved. So until then, NCLT doesn't come into picture. SEBI, listed companies which are listed on any of the stock exchanges in India, who governs them? Who governs their functioning? And what kind of minimum requirements are prescribed for how a company should be when they are public is governed under the umbrella of SEBI. SEBI not only ensures that the company should behave in a particular format through regulations, notifications, and things like that, it also has another objective of protecting the investor interest. Now, who is an investor? Investor is somebody who is a shareholder generally, or who's lent money to the company. Now, the safeguard of this money becomes crucial. Gatekeepers of these safeguards are done by SEBI and the regulatory authorities for and on behalf of the company. On behalf of the company means the investor interest. So that's how SEBI has helped in shaping various regulations, various aspects, various journeys, wherein when a company is coming for public, there's a three-stage process which everybody would have read in their articleship journey. One is the filing of the draft red herring prospectus. Then SEBI will come back to you with certain comments. Then you prepare the red herring prospectus and file it. And if there are no comments, that becomes the offer document. It becomes the final prospectus. Now, where we as chartered accountants can be a game changer under the SEBI aspect of preparing the companies for IPO through the RHP, and to the prospectus. Since I'll go back again to our initial example, since we are involved with the company from the planning stage itself, we will have much clarity, much foresight in terms of what a company does, how a company does in a simple language. That has to be elaborated with the help of merchant bankers, with the help of book running lead managers to put the minimum information in the draft red herring prospectus. We are also looked upon to give comfort by way of certifications to such merchant bankers saying that, look, we have been sailing with the company. This is the data which we received. We have verified this. This data is found to be true and correct, not true and fair, because it's a certificate submitted to the merchant bankers, book running lead managers. Having said that, the responsibility on the chartered accountant expands multifold because you're not only a gatekeeper of the data, you're trying to help company go public, where public is having an added faith of trust on you, so that you can ensure you can orchestrate the necessary change which is required, the necessary listing change which the company requires. Connected to that is RBI's example, which I've briefly covered earlier, which I'll slightly touch upon here. When I was covering RBI, I was just covering from the foreign exchange perspective. RBI is way RBI is also a banker to the bank, wherein it ensures help to maintain liquidity across the financial system. And any business which we advise run, finance is the lifeblood of any business. In one way or the other, being updated about the various policies which are being implemented by the RBI is Yeah. Apologies for the break. Yeah. When I was saying that RBI not only acts as a financial regulator for the foreign exchange, it also acts as a regulator for the domestic aspects. When we say domestic aspects, the classic thing is how to enhance or maintain liquidity within the financial system, because even a common man is touched upon by this nerve center, because RBI is the one who will orchestrate the string and chain of events, wherein a common man, when he needs money, Okay, that particular liquidity comes from a bank. That particular bank is decided by and from the Reserve Bank of India. So the sequence, if you see, the flow of money, if you see, the regulatory side of things, which when you see, RBI not only orchestrates for corporates, it also acts as a reservoir for the banking system to be efficient, the financial markets to function without any inefficiencies. When you're trying to achieve this, whatever inefficiencies arises in between, that gets flagged off and it can be uh, advised by the chartered accountants in such a way that the financial regulator can help it get into the course correction. So that's on the corporate and financial regulators. Moving forward on the taxation and sectoral authorities. Now, when we're speaking about regulatory skills, the one source of information which we could rely on would be for our daily practice would be on the CBDT and the CBIC, which is for the income taxes and the GST, the direct taxes and the indirect taxes. How a particular compliance needs to be done. The resource material is generally available. We are better equipped to have access to those resource material in such a way that once the interpretation is ready, the explanation through notifications, through circulars and things like that gets in order, gets in shape. Having first-hand knowledge of these circulars, notification, changes over time, interpretation over time is of primary importance. Similarly, we also are known how we can advise the Insurance Regulatory and Development Authority of India in terms of the insurance industry, on how the insurance business works. Once a chartered accountant understands on how the insurance business works, the regulatory advisory which goes along with it comes with the relevant expertise, and the changes through it which are brought in through the notification circulars and so on and so forth are being affected through the IRDAI can be made aware so that the clientele can do the compliances. Similar to that is the telecom policy. Today there are hardly 3 to 4 players in the telecom industry. Of course, they are very giant players in the market, but to be compliant and to be on the right side of the law, it takes enormous efforts, and to a greater extent, we shape that kind of reality as professionals so that our advisory helps them to be on the compliance side of things. Finally, when I'm trying to cover all this, I'm trying to achieve this under the entire disciplinary framework so that if there is any professional misconduct, we would be aware on where we will go. We should be aware. Our conscience should make us aware on where we will go. Our code of ethics are the beacon of light when we are trying to guide ourselves through this professional journey of our advisory. And the disciplinary mechanism which CA should adhere to, so CA should conduct, and the responsibilities which come along is also of a similar crucial importance. A way in which we can hone our regulatory skills is to create certain actionable tools which will enhance our regulatory practice. When I started this session, I told that we are the governance partners and not only a compliance executor. So when we are telling that we are governance partners, the stage one should be the compliance executor, wherein we proceed ourselves with preparing a monthly compliance calendar for all our clients, be it an individual or a corporate. For corporate, monthly calendar makes more sense. For an individual, if they're running a proprietor business, then depending on the TDS law and the GST law, you would frame those particular laws, the compliances with those particular laws. When we are saying this, since we are aware on what kind of regulatory framework is applicable for the relevant clients, we need to prepare a map of all the laws which are applicable to them and track on a monthly, quarterly, annual basis, including the event-based compliances. Let me connect here with the earlier example of non-filing of INC 20A when the IR3 KYC is did. Let us say if a professional was advising a particular startup, right? Already a compliance calendar would have been in place the moment the company got incorporated. As soon as the compliance calendar is in place, our job is now to monitor the particular calendar in terms of how the delivery happens. If we just keep tabs on those kind of things by preparing a monthly compliance calendar, we'll be in a better position to advise our client and client. This can be followed by the impact assessment. Many of our clients will definitely come to us asking that, hey boss, look, uh, I'm okay. I'm doing this compliances fine. Let's say I'm not going to do this compliances. I'm not going to pay any taxes. What will I do? What will happen to me? So an impact assessment is something where this takes in where I had one difficult client during the service tax regime, wherein he told upfront saying that I'm not going to pay any service tax. I'm doing business. Why should I pay service tax? I'm selling some food. Food doesn't involve service. Food is a product. I should not pay service tax. He was hell bent in that particular aspect. So we told him, boss, if you don't do, then all the regulators will knock your door and then your business will be shut down. In the next 9 months, that reality converted. Started with the service tax, then came the Money Laundering Act, then Enforcement Directorate used the Benami Act, and finally the Income Tax Law and the Companies Act came into picture, and then ultimately the business was shut down. So a small arrogance on a certain founder landed him in the closure of business in less than 12 months. So this is how we should be in a position to assess the impact of non-compliance and to factor in that non-compliance in our day-to-day operations, which will affect the accounting function, the taxation function, and the business model as such. On the practice side of things, people who are into practice, when you're preparing a compliance calendar, when you're doing an impact assessment, there are a lot of practice management tools which are available. We can leverage them in terms of our practice which we happen. For example, there are a lot of free softwares and minimal paid softwares which the committee of members has provided for GST, for TDS compliances, for a practice management, for all the chartered accountants who are into practice. We can leverage those tools in preparing the documentation in place so that whenever there is an issue which will arise, the relevant file can be referred and that can be responded. These practice management tool helps us and shapes us in such a way that we don't need to do a Google search often when we are just stuck or when we don't need to deep dive the entire database of our client to issue one particular to address one particular issue, right? So that's how these documentation tools will help us in getting the right set of answers when there is a need in place, followed by monitoring system. When we say that tools and techniques are to be used, we need to be aware that what kind of regulations will become applicable to our set of clients, our set of people, and we need to be having a good foresight in tracking the relevant regulations in place, the necessary amendments, notifications, so on and so forth. And these providers, these information providers, have now come up with AI agents in terms of making the compliances simpler. Now, AICA class is also equipping chartered accountants with the necessary AI tools and the toolkit so that using the large language model, using the bigger data, using the professional database, we can automate certain things using Python scripts. So the CA Institute is also helping chartered accountants to develop the necessary skills. To move forward in terms of the regulatory mapping framework, excuse me, first and foremost would be we should know what kind of compliances our clientele require. For that, the list of clients, the database of the clients, and the mapping on the application of such aspects needs to be in place so that each and every item is identified, the application of which is known, and the profile captures the master data. Once we have this client database mapping with the relevant regulations which are applicable, we'll be in a better position when a new law comes or when a new amendment. And let us say when the new amendment comes, then we can have a gap analysis which can be conducted. This will help us solve two problems. One, the existing system will be strengthened. Number two, the new system which will be there, that will get different visibility, a different comprehensive visibility in terms of where we will have to achieve. When I say that the existing system will get strengthened, I mean that if there was a particular client you were not following certain compliances, but you came to know recently because of some intelligence or some of your internal checks. Under that scenario, when you're trying to address the particular issue in terms of a compliance gap, there you can cement it by seeing any schemes are offered, any amnesty schemes are offered by the government so that you can be on the right side of the law. A small example here would be GST amnesty scheme, wherein the penalty for not filing of the annual returns or the monthly returns was waived significantly. Yeah, so that is how the regulatory mapping framework would also work under the gap analysis. Representation prep. So when you're trying to resolve a conflict, when you're trying to defend your client, when you're strengthening the way in which you'll approach the regulator, the thumb rule is always be factual. How you present the facts would be of most important. That you can take some assistance from AI tools like that on how to put across those facts. Sometimes you need to be brutal, sometimes you need to sugarcoat and play around with the words and convey your point. But at the end of the day, if you're not factual, if you're not building your arguments, and if you're not avoiding certain errors, that will work out to be in a negative way for your client. Whoever it may be, it can be an individual, it can be an anybody, it can be a company, it can be a job, it can be whenever you're representing, let's say even you're representing law, let's go to the intent of the law behind which a particular law was created before we end up to the conclusion part of things. So that is how factual information is of most crucial in our practice. Now, let me let me share the pathway on what important aspects is there for practitioner CAs, for industry CAs, for startup or fintech advisors, and for governance roles and how they're emerging the current landscape. So when I was saying you earlier that with the example of doctor being a specialist doctor, skin doctor, eye doctor, senior citizens eye doctor, child's eye doctor, baby's eye doctor within the womb, so neonatal eye doctor. So considering all those parameters, we are moving away from being generalist. We have to pick up something and specialize it. So we can put ourselves into two buckets. One can be a set of practitioner CAs, the others can be a set of industry CAs. If you're into the practice, the usual suspects come into play, wherein you are into audit or assurance, or whether you are into tax litigation, it can be direct tax litigation, indirect tax litigation, and so on and so forth. Whether you are a labor law litigation expert, or whether you're a labor law compliance expert, or whether you just advise on direct taxes, indirect taxes, or labor laws and things like that. Whether you help your clients in preparing the regulatory reporting under the Ind AS, under the AS, under the IFRS, basically governed by the NAFRA and so on and so forth. How, as you are the auditor of a company, how your report can shape the client's future using uh, company's auditors report order 2024. So various aspects are available for the practicing chartered accountants, using which the umbrella of which we can pick up one and specialize in a particular area and then explore because the market size is expanding so much that there'll always be work for the chartered accountants. I'm sure, I mean, you would have heard about this quite recently that there'll be a requirement of 50 lakh CAs by the year 2035. So imagine today we are a community of almost 5 to 7 lakh CAs. Imagine the demand increasing to tenfold. May not be 2035, it may reach someday by 2050 or 2055. Maybe we are a little ahead of our time, but still, that demand is going to be there. And to achieve that demand, if we don't equip ourselves with the relevant regulatory skills under each of the aspects, be it a practitioner CA or be it an industry CA or be it a fintech advisor or be it in the governance role, it will be quite challenging just to stay generalist because end of the day money may not be able to we may not be able to make some money in the process. So that is how the practitioners need to equip themselves on the audit, tax and litigation advisory. Coming to the industry CA, when you are into industry you will be in certain finance role or you'll be in certain SOP role or things like that. When you're a finance controller or a finance manager or a chief financial officer, you should have a complete pulse and an understanding on the compliances, the internal controls, the financial reporting, and the stakeholder management. By corporate compliance, I mean to say that once you're a corporate, you have your month-end compliances in terms of GST, TDS payment, all those things, followed by closing the MIS and things like that, having the accounting in place and things like that, having the labor law compliances and things like that. So once this cumulative efforts of the monthly efforts are consolidated, you end up into a quarterly compliance if you're a listed company or a half-yearly compliance if you're a SME listed company. And that will culminate into the year-end financial reporting, which happens once a year for the financial year. And stakeholder management. Because stakeholders are multiple, it can be creditors, it can be lenders, it can be debtors, it can be multiple people. So it is way beyond shareholders. When stakeholder management comes into play, chartered accountants are the orchestrators of dissemination of information because we play along with the data, we play along processing of the relevant data, and that is how the information gets disseminated to the to the general public. So that's where the industry CA also helps in shaping the role specific regulatory skills. When we are advising startups, fintechs, of course, they are also corporates. Of course, practitioners, CS may or may not be able to take up that piece of the guidance. We need to brief them the latest updates, let us say, starting from the DPDP regulations, preparing them with the FEMA updates on foreign direct investments, overseas direct investments, and things like that, making them understand the importance of information on the digital currency, virtual digital assets, which are also coins, and how the reporting matter works, including startups and fintech advisors. It may be an investment, it may be a trading side of things. We never know how it landed up the particular place. So that's how the startup or the fintech advisory, so in terms of how the crypto will be taxed, let us say the virtual digital assets, when you're moving the virtual digital assets from one location to another location, or should I say that when you're moving from one wallet to the other wallet, on how taxation will work around. Because today, as the law stands, the law is slightly unclear in terms of how it will happen, but it has to happen. So planning according to that particular situation would be of great importance, and how one is able to handle the GST complexities of the client, because today anything and everything depends on how much compliant the client is in terms of their GST registration. All this said and done, the umbrella would be on the governance. So if let us say you're being a virtual CFO of a company, right? You need to ensure that as per the scope of work which is shared to you, will you be in the position to uh, finalize the accounting on a monthly basis and Will you also help in MIS, or will you help in end-to-end MIS filing, compliances, and so on and so forth? Followed by, this is on the one extreme of the clientele. On the other extreme of the clientele, you need to make them aware on what kind of responsibilities the law has prescribed for these particular aspects. For example, for directors, there are minimum set of duties and responsibilities, which are also known as roles and responsibilities, which are being framed and which are being disseminated and needs to be followed. If it is not followed, then it's a violation of the law, right? Similar to that, being an advisor on the board of directors committee, being a part of the audit committee is of crucial importance because that will give you the real insight on what the business potential is all about and how the founder is envisioning the business to take it forward. Within this, when everything is happening, there'll always be a conflict which will be there. So the step number one in any conflict resolution is to just analyze by taking one step back. I know it is very, very difficult, but yeah, just to analyze by taking one step back on how this particular conflict arose and how we can resolve it. So that will be of greater importance than anything else, followed by corporate transparency. Now, um, everybody would be aware that crackers are manufactured, which are manufactured in India, are done in the town of Sivakasi. But nobody will deny the fact that it is being manufactured by the adult. But the harsh reality is that even today, many child laborers are involved in the manufacture of such crackers. Now, let us say a particular cracker company wants to go public and wants to raise some money from the market, right, as a primary issue and as a secondary issue as well. Whether the particular corporate where they are manufacturing crackers, whether they'll disclose the real age of all the employees by verifying the Aadhaar card or something, the answer may or may not be yes, because we have to go by the way of a trust, because it is it is something which takes years to build, and it takes some, and that breaking of that particular trust takes just a couple of minutes. So in terms of corporate transparency, can I lie in the drafting documents? The answer is no. But how do I work around this? For those aspects, you can always rely on the custom tools which are there in terms of taking cognizance of how the planning can be efficient and effective. Now, in terms of advanced regulatory awareness, we as chartered accountants are known to prepare ourselves for a future of the regulatory compliances where even today, if you read the news, if you follow the news latest, the Ministry of Corporate Affairs is coming up with some notification. There have been some rumors which have been floating saying that the turnover of the company, if it is below 1 crore rupees, the audit will go away. The requirement of a statutory audit will be done away with it, and the self certification will come into place. I will surely and wholeheartedly accept this particular decision if it comes, because we are no longer on the execution side of things, we are their governance partner. So we need to equip ourselves in terms of how this new age business moves on an autopilot mode in terms of all the compliances, all the activities, all the month-end closure activities, so that the only job of a chartered accountant will be to design those framework and to test whether the implementation of those framework is happening effectively or not. So that needs to get taken care under the advanced regulatory framework. AI is a great start to help us uh, achieve the AI-driven compliances. Similarly, it can help us automate a lot of regulatory workflows in such a way that uh, one feels that it is a simplified way of handling things. Yeah. Global minimum tax. As we are all aware, on base erosion and profit shifting, many global companies using the place of effective management are shifting their uh, profit base into a different country, and that is reshaping the world order in terms of what kind of tax. So globally, what has been initiated is that whatever jurisdiction you are in, this will be the bare minimum tax rate which will be applicable. So, in one way or the other, it is getting transformed into such a way that one global one tax rather than one nation one tax. So, at least see, let us wait and watch on how that will pan out to be. In terms of data privacy and cybersecurity. Uh, with the advent of the DPDP Act and the security compliance responses under the DPDP Act, would be of uh, great game changer, because if you are aware on how the client systems work, you will be able to better design on how the control should be and how the privacies can be established in terms of confidentiality as well. Cybersecurity is one leg, confidentiality is on the other leg. So you should not end up on the wrong side of both the laws. You should know how to find a harmony and find a balance between these things. Finally, India is taking care of the ESG, which I was earlier mentioning, that uh, ESG aspects are coming for the top 1,000 listed companies. So because the ESG are in place, it's a good move in the right direction. It needs to get evolved. It needs to get churned in such a way that the evolution happens in a smooth and transitory manner, so that we as chartered accountants can orchestrate what we are trying to achieve through the ESI regulations. Now, this is the last part of the seminar wherein we are telling that how a real-time compliance evolution will happen, and how the digital transformation has evolved our landscape in terms of our delivery as chartered accountants and our capabilities. So when we are aware that NAFRA is having an oversight on all the financial reporting aspects, which is being taken care, if I don't ensure that uh, the regulatory scrutiny is in place, when the regulatory scrutiny is in place, if I don't ensure the particular process flow is followed, it will be a real game changer for the client, and it will work negatively for the client in terms of addressing the particular issue. Similarly, today the access to information is such vibrant that you can have real-time reporting in terms of how much is your collection, how much is your sales, how much is receivable, how much is payable. All those information and tools are available widely in making us compliant. And how much GST do we need to pay? So when real-time reporting was enabled, that created multiple doors for chartered accountants and for the governments to track the flow of information using which the delivery would happen. Similarly, on the digital conflict management and resolution, it's a very interesting topic, but I would give it a skip due to paucity of time, followed by the automated regulatory monitoring. So, when I say that automated regulatory monitoring is in place, the best way would be to use necessary AI tools, Python scripts, and things like that in terms of having the digital transformation done in place. Yeah, coming to the penultimate leg of the presentation in terms of case studies and how certain learnings are imparted from my practice on the FEMA non-compliances and startup funding. So there is always this issue of new age founders wherein they pump in the money through their own funds, and at the initiation of the transaction itself they are unclear on whether they need this money back to pay back outside India, or they'll continue to hold it in the Indian arena. So this is a classic issue under FEMA wherein people play around the law saying that, look, hey, I invested on the repatriation basis, but I want to repatriate the money back to use in certain other aspects. There is a workaround for that kind of cases as well, but the workaround is still in the gray area. We as chartered accountants are still should not be comfortable in giving the workaround for everything, but to plan it in such a way that it aligns with the law of the land. Yeah. In terms of non-reporting of NRI funds from friends and family, of course, similar workaround is available for that, but for that to happen, all your friends and family should be participate. Yeah. So non-reporting is not easy, and proper documentation and timely reporting is also critical. For example, a lot of companies, a lot of startups which receive money from abroad, they don't maintain proper documentation recycling back to the FIRC copies, and they don't have any timely reporting aspects unless they have outsourced it to the chartered accountants. We as chartered accountants, when we are doing a compliance calendar or when the event-based calendar kicks into place, we should ensure that the necessary documents required by the associate authorized dealer banker are kept in place in such a way that when we require them in the future for any reference purpose, they should be well preserved and hence making the transaction much smoother. Now, as I was earlier discussing the director's liability under the Companies Act, it gets triggered even with the slightest of compliance issues in terms of non-filing of forms, non-filing of commencement of business, non-filing of active forms. So even non-filing of DPT3 form because of two reasons. One of the two reasons is on the awareness, second is on the lethargy. So on the awareness side of things, if a founder is not aware, they cannot take any shield under the law to protect themselves of non-awareness of a particular compliance because hey, they started the company, they should have hired somebody who would have advised them, or they should have known on what kind of compliances I need to take care when I'm starting a company. So those kind of things are quite difficult in the environment which the company would operate. But again, the penal consequences and the liabilities arising out of such non-consequences are very strict and very crucial. Wherein at times the personal liability can also be the personal assets can also be attached for any of the compliance failure, even though you have a methodology in place. Finally, because we have been speaking about all the compliances, all the regulatory framework, and so on and so forth, the criticality of a particular standard operating procedure becomes of core importance because I was addressing one issue, one clientele where a lot of cross-functioning teams were there. The marketing team, the marketing function was handled by the finance team, the inventory function was handled by the purchase department. The purchase department was handled by one single person with the limited staff. A lot of cross-functionings were happening, and there was no set of flow of events over there. So we stepped in and we helped them establish a standard operating procedure wherein they should know what to be achieved when you're moving from A to B to C to D to E to Z. So it cannot be a haphazard movement, and it has to be in a particular straight line. If one functional element is not happening, that's fine, but that has to be skipped. It cannot be overlapped with another function. So that is kind of an important aspect under the standard operating procedure, and which helps us to address and prevent a lot of compliance gaps later and saves us from operational failures. For example, everybody would have heard about this issue of IndusInd Bank, wherein they did not do a particular provisioning, either due to oversight or due to lack of awareness, which is not clear. But still, because there was not a particular strong standard operating procedure, the systemic failure kicked in, and then it happened so that ultimately the shareholders had to face the brunt of the fall of the share price. So that kind of learnings which I've come across from my set of practice. The shifting of mindset is of crucial importance where we are always told that we should think strategically. By strategy, what it means is that your approach should be based out of logic in tandem with the regulations which are there across the law. So your approach should be based out of logic and in tandem with the regulation which is prescribed by the law. That is how you can think strategically and in a simple manner in such a way that you evolve from a compliance doer to a governance partner or to a advisor. So that's how the mindset has to evolve from the from emanating from the strategic thinking perspective. This followed by continual learning from various ICI resources, toolkits, and so on and so forth, and things like that. To be aware about the latest professional development, the CA journal is the fantastic source of having this absolutely amazing repository of the overall developmental landscape. So, having said that, we as chartered accountants are protected by our ethics and our ethical regulatory committee, so that we act in accordance with what is prescribed by the law on behalf of the client and for the client. Only this will ensure that we build a long-term credibility by following integrity within the arena of our practice. And with the advent of artificial intelligence and various toolkits and agentic AI being available, we should be prepared in using those kinds of technology and mastering those kinds of technology and using them as a toolkit to practice the excellence. Let me connect this with a small example. Now, let us say you're going through a surgery. It is on your body. Let us say some heart surgery is happening. You are not conducting that surgery. Your doctor is performing that surgery based on his experience, based on his learning, and so on and so forth, and aligning that with your uniqueness of the body. So the toolkits used may not be standard. The toolkits used may be vibrant, may be different, may be dynamic, but what to achieve is important rather than knowing what not to be done. Linking that example with a CA practice would be understanding and having a clarity on what is required, a positive list, rather than having a negative list wherein you say that I don't want these particular aspects, would be a game changer for the practice and the industry stalwarts and the industry professionals as well, because the clarity will come when you know what you want rather than you know what you don't. So we know that we need to advise our clients and clientele. We need to be updated with the law. So we know how to, and where to do that would be a question of time in terms of what kind of toolkits we are using. As I was saying earlier, we can generate some Python scripts and so on and so forth, and you can use the ICA website, we use CA GPT and stay ahead of the curve and use those as your toolkits in being prepared on what we want to be rather than doing a post-mortem analysis. So I think I come to the end of journey in terms of uh, disseminating this knowledge. And I really thank every one of you uh, to have helped me in shaping me this presentation. And I hope that this is the beginning of your journey to the regulatory excellence, which will start from today. And I thank the forum members to have allowed me to speak on my learnings, my share of thoughts on the regulatory aspects as well. So I'll take some questions from the chat box since we've done it before time. So yeah, um, just that.
Sir, the
Can you
question is, can you explain the impact of DPDP Act 2023 and its bearing in financial reporting starting from financial year 25-26?
Yeah, ma'am. So when we say that DPDP Act it is passed and the impact of its bearing on the financial reporting, the processing of the information on the financial reporting, and uh, uh, how we process the clientele information, using what tools, using what confidentiality we maintain, that becomes of prime importance because we are in most of the let me take this in a practical way. In most of the cases, we as chartered accountants prepare the financials and we get them signed from the management, and then we attest it and give our auditors report. These are all the cases where smaller audits get involved. Now when we say that in small audits that we prepare the financial statements, that is the most critical point that we become the owner of the financial statement. So that has to be that change has to be communicated to the client, that we assist the client or the client staff directly in preparing this information, financial reporting information, and then only do the audit behind the financial reporting and not prepare the financial reports as such. So the responsibility will be the responsible party as well under the DPDP Act if we take the ownership of even preparing the financial reporting. I'm sorry, but most of the smaller CAs take up these responsibilities and the smaller audit cases take up these responsibilities, but that has to get evolved and that has to get updated. So I hope that is addressed.
And, he has also asked that please also suggest how to take care of this responsibility in a better and effective manner. Kindly suggest the toolkit to practice.
So I'll take the responsibilities in a better and effective manner first. That would be your art of negotiation in terms of how you and what all things you're negotiating with your set of client and clientele in terms of uh, how you're able to convince them that look, under the new regulations, I'm not supposed to do certain activities, you only have to get it done. I may be able to advise them or guide them, but I may not be able to deliver you on that front. So that requires a great art of negotiation on the part of a relevant chartered accountant, to do that in an effective way. That will help them. And the toolkit to practice would be, whenever I am in a doubt, whenever I feel that, okay, if I don't know a particular concept, I always go back to the study material which the institute publishes, because that gives me a strong and enough foundation for me to act upon it. And then from there on, I build it in such a way that whatever queries have come up, I address to those queries one by one in an efficient manner. And then I read the law in terms of how the explanation to the law things up, and then I refer to other resource materials. That's how I have created my own private toolkit in this particular fashion. Yeah. So market available toolkit for a comprehensive practice is not there. Here and there, we can take assistance from CAGPT, which is given by ICI, where you just have to put in your phone number and an OTP will come and you can access. If you have a paid chat GPT account, then you can use larger number of prompts to get things done under the various modules which are there, because ICI has trained modules on the various resources. So that is one good repository of knowledge which happens. Microsoft Copilot can help us download all the repositories and help us in such a way that relevant information can be accessed. Google's Notebook LM is one tool where you upload couple of PDFs, up to 50 PDFs for a free account, and then you just ask questions, prompt and asking such questions from there itself, and then pick up their information, have the add the human element, human flavor to it, and then you can take it forward. So there is not a particular one single toolkit which is available. The market is yet to evolve. The market is yet to mature in that side of things. Yeah, you can use multiple sources in preparing your own toolkit. Yeah.
That's all from the questions I had from the participants, sir.
Yeah.
So, can we, one more question we have. Please also explain what kind of responsibility will lie on CA under DPDP with some practical examples.
See, the law is still evolving. I mean, we are yet to see some cases, some regulatory cases where there'll be a dispute between the client and we as chartered accountants. As soon as a dispute arises, it almost takes 3 to 4 years for a dispute to materialize and then get a result. So, if I were to predict on what kind of responsibility will lie on CA, first thing would be on the confidentiality of the data, because it is easier to access any data from a CA's office, from a small CA's. I would not categorize small CA, large CA. I would just categorize better controls and inefficient controls. So if you have various systems, various factor authorizations to protect your data, and you store your data in the cloud, it is easier. and you have access control to those clouds, it is much easier, because the first line of defense is access to the particular information of a client, right? So under the DPDP Act, when we are saying that the information is of prime importance, financial reporting is one leg. Personal information also gets captured. Now, let us say a company is going to IPO, right? How you have a copy of Aadhaar card and PAN card, and using that copy of Aadhaar card and PAN card, you prepare a certificate saying that I am certifying as a chartered accountant, and these are the directors of the company. This is their Aadhaar and PAN and all those things, and you submit it to the merchant bankers. You are processing that information. Today, the law is unclear on what kind of penal consequences, what kind of extreme penal consequences a CA can have to process this kind of personal information, because it is the personal information which is getting captured. So it is yet to evolve. Time will tell, but again, yeah, we'll also be held responsible if there is any mishap happening. The the room is wide open for mishaps to happen. That is what all I can say today. Maybe 2 3 years down the line, when it matures, we'll be able to take this better. Yeah.
Please suggest a safeguard under DPDP for a CA.
Okay. I think you're trying to take me to the tech side of things. Uh, if I were to suggest some safeguards, then as I was mentioning, that if it is a scanned copy of your Aadhaar card or something like that, then please ensure that the purpose of get it when you're getting it self attested for your own documentation. Please mention the purpose below which you're taking to process this information, and process that information only for that particular purpose and not for any other purpose. So don't use that particular proof for multiple things. I know it will be a lot of paperwork and things like that, but if you were to safeguard yourself, then please mention the purpose for which you're collecting the document, because using the document only you're going to give a certificate. So when the purpose is mentioned, that will be of greater help. Yeah.
I think now this is the end of the questions from the participants end. So with this, we can close the session. So thank you so much, sir. It has been such an honor to be a part of this wonderful webcast, The Art of Regulatory Skills, Essential Tools for Today's Chartered Accountant, organized by the Professional Skill Enrichment Committee, ICI. So on behalf of the committee, I would like to extend our heartfelt gratitude to our speaker, CA Dinesh Chawla, sir, for his enlightening session, and a wild round of applause and thanks to the organizer, Professional Skill Enrichment Committee, for our today's speaker, CA Dinesh Chawla, sir, and all our stakeholders who has made this webcast a success and a memorable one. So, finally, we would like to thank all of you present here and helping us to make this a grand success. Thank you all. Thank you. Thank you, sir.
Thank you.
We can close the session.